What's going on, gang? Billy here, Storm Trades. It's time to do another trade recap. I'll bring you through my super simple process of establishing a daily bias, how I read the high time frame market structure narrative, and ultimately how I found my winning long trade on gold futures Monday, June 9th during the AM trading session. Let's jump right into it, always starting on the daily, and I'm looking for a narrative that jumps right out to me. I get that narrative by establishing where price currently is relative to internal range liquidity and external range liquidity, right? First things first, I just want to establish where the previous daily low and the previous daily high is, and then I will draw a fib to see where we currently are in relation to that. Okay, so right now we are very low into the low quadrant, the bottom quadrant of the previous daily candle, with some significant down close, bearish candles previous days. Okay, so I'm already starting to see a narrative, right? I now want to mark out if there's any internal range liquidity that we're currently in, or if there's any internal range liquidity that is helping establish a narrative. And in this particular case, we actually had a bullish daily fair value gap that we closed down strongly through and actually created an inversion fair value gap on the daily. So I just marked that out there. Just in terms of looking at the narrative, okay? So we closed strong below the bullish daily fair value gap. We've inverted it. To me, that's very bearish, right? Now I want to take have we recently delivered from any high time frame external range liquidity? And we have. So right, we just sweeped an external range daily swing high, and as you can see, this is framing up here for lower prices. I'm already kind of seeing that. We had a nice liquidity sweep here. So if you're looking at like C2, C3, C2 sweep, C3 displacement effectively, right? Expansion candle, and then we would expect, if we were doing, that's like how T-Trades does it, we would expect even the C4 to continue lower, right? As long as we have a solid draw on liquidity. We actually do down here. We have another nice swing low on the daily. So look, I'm trying to establish my daily bias as simple as possible. I can do that within a minute. What I just showed you right there, I'm looking for lower prices on the daily. Now, as you'll see here in this example, we end up taking a long, okay? Because the vast majority of my analysis is on the market structure time frame. For me, that's when I do my time frame alignment, I start off on the daily, I analyze on the hourly, I require the hourly to have some sort of a hourly POI traded into or swept, and then I will drop down to the M5. So if this happens a decent amount, where the daily bias is bearish, but when I go to the hourly time frame at the time of my analysis, I can clearly see a change in the state of delivery up back into the range. Okay, now that also makes sense here, right? Because the midpoint of the previous daily candle is way up here. And a lot of times when we're going to have an expansion lower, we're going to have an open high, then low close, right? So the power of three. So I can see that price is wanting to go lower on the daily and still understand why price may be able to reach all the way back up to the CE of the previous daily candle, right? So I'm just talking you through my logic, right? So I have a daily bias that's bearish, but when I go to the hourly time frame, and this sort of looks bearish as well, right? And we're coming down here, but I'm looking for the most recent change in the state of delivery that can be confirmed by the presence of fair value gaps, right? So in this particular case, we have a fair value gap right here, okay? We have a change in the state of delivery right here, okay? And this was all at a significant liquidity level, which is the previous daily low, right? So this is starting to make sense as to why we actually could have higher prices here. I will always draw a fib from the swing low to the swing high that created the change in the state of delivery on the hourly, just to see what lines up above. And I noticed that we have some low resistance liquidity right up here at the -1.5 to -2. Okay, so we've got some targets to reach for. I also see that right before the -1, we have a bearish hourly fair value gap there, which is internal range liquidity. If we swept external here, sweeping the previous daily low, we're going to be looking to expand towards internal range liquidity. Okay, that's the narrative. None of this has to happen, right? This is just a game plan. Most of the time, a lot of the time, this doesn't happen. It doesn't happen the way you expect it to or want it to, which is why I always try and have an invalidation level. So on this day, I wrote in Unicorn University on my personal thread that my invalidation would be a close below this hourly fair value gap here. In that case, I would expect prices to come back in line with the daily bias and start taking out lower targets and ultimately heading down here. But my game plan is an if-then strategy, right? If-then question. So if we don't invert this and we use it as support, or we sweep a swing low and then start heading higher, I would expect price to head back up here to the internal range liquidity. Now I'm going to mark out this as a hourly swing low, and I'm going to be waiting for price to sweep that or come down into the hourly fair value gap right here in order to engage my model, right, which would be on the M5. On the M5, and I also want to mark out here, we have a nice swing high here that happens to be the London high, which is a significant key level, right? So, and that's a decent amount of there's a decent amount of room here, right? That's almost 50 bips up. So, there's a lot of juice here that we could reach for, in my opinion. So that's what I'm looking for. I'm going to drop down to the M5, and on the M5, I am requiring some sort of a sweep of a hourly POI. Okay, so the first one I'd be looking at right here is this hourly swing low. And let's move price forward. And we get a sweep here pretty soon. There we go. Right, so there's the hourly swing low sweep. That's my first requirement. And then I start looking for a change in the state of delivery on the M5 timeframe. Now, along the way, I'm also looking for other ways to get involved on a trade once I've established that I believe price is likely to head higher, right? So I have this nice drawn liquidity up here at the London high, and we've just swept an hourly POI. In this particular day, I was looking at by the way, this sweep here is also the London low. Okay, so another key POI there, or a key form of liquidity. So then I marked out this would be my change in the state of delivery up here, because this is the series of down close candles that took liquidity. And I will look inside of this series of down close candles, since it's fairly large. I'll look at potential inversion fair value gaps, right? So this is an M5 fair value gap, a bearish fair value gap. But if we were to close above this, okay, that would be an indication that we are in fact moving higher. So that's what I was looking for on this particular day after sweeping the London low and sweeping this hourly swing low. I wanted to see some sort of a close above the M5 fair value gap. Right there, we were supported by it. We come back down. And on this very next candle, we blast through it. I wanted to see a pullback here. And on this candle, where we tested the inversion fair value gap, okay, I looked to enter. I had a 1.83R target up to the London high, and I put my stop below this candle right here, which was actually below a bullish M5 fair value gap as well. Okay, so I gave myself a little bit of room and entered right here. Stop there. take profit at the London high. Okay, about 1.83. And let's move price forward here. Wow, at this juncture, we also have established a breaker. Okay, so this is a breaker plus a fair value gap inside. This is a unicorn, right? So when we retest this, okay, you can pyramid in. That's what I do, right? So as soon as we get a retest of this, so we had our first PD array that I entered on was the inversion fair value gap. The second one I could have entered on was the change in a state of delivery right here when we close above that. But once we've closed with displacement through this breaker, if we come back and visit this, I would look to move my risk up and add a contract. Now, on this particular day, I didn't do that. I just watched price come down here, tagged the M5 fair value gap, and we just rocketed higher for a good 1.83 R win. This is a really good example of a day where I was pretty clear on my daily bias being bearish. However, in reading the market structure on the hourly, it was clear to me that we were headed back up to at least explore the London highs, and that made sense because we had a long way to go to reach the CE of the previous daily candle. If you guys got anything out of this at all, I really appreciate a like and a subscribe. Just so you know, I do this primarily because it helps me understand my model better. It helps that I'm repetitive. It helps that I learn from my mistakes and to see what has been working. Journaling is fantastic. I journal every single day. I'm in the Unicorn University with all the badasses in that Discord, and we're trading every day. And a lot of us have our own personal pages where we post our analysis and post trade analysis and invalidation levels, and it's a great place to trade. Anyway, just you guys have a great day. I appreciate anybody who stuck around to listen to this. Have a good one.